Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And it really helps the algorithms if you hit that like button. So I appreciate it very much. Just want to do a little disclaimer. Nothing talked about in this video, past or future videos should be construed as investment advice. Just my opinions on the markets and what's happening. And remember, investing, it always involves risk. And I can't guarantee performance. So consult a financial advisor if you want to invest. So anyway, let's get into the stuff today. Well, not so big news today, but there is news today. So I'm going to go with a little bit differently. Gold that was down today. See, I hate how they do these stupid after hours. I wish they would just have it what it closed at, and then like below, like right here, they can have after hours, but it would actually see. But I remember it was around the 2400, so down $20 today. That's what I remember. And gold was down significantly, around 70 or 80, and then it closed only down 35. So I think a lot of those people who bought that low are now taking profits. And the other thing is just margin selling again. So a lot of speculators have bought at 2200, 2100. They're worried about deflation maybe. So, and let's get into the stock market. Stock market was up. I mean, we'll just do the Dow. It's the same for all of these. Up 294 points. And if you look at it, it really went up. And I think that was a short covering rally. And then it was down a little bit during lunchtime. And I think a lot of those people they covered their shorts, but then what happened was I think some people around then tried to get long, and or some people may have gotten long, and it went up, and they started covering their shorts. And then what I think happened is some of these people probably went long early in the morning. They were at one point the Dow was up 500 points, and so I think those people probably said they figured it's a weak economy. The economy is bad. We went long. The Dow's up 500 points. Let's just start selling, and then it went up from at one point it was up 600 points, and now it's only 294. So I that's what I think happened. Just some trading thing. Let's go in the economic data. I don't think it had much to do with today, but LNG managers index, market rarely pays attention to that. That's actually good. And that's just basically logistics managers. Trade balance, that was higher than expected, 73.1 billion. Normally it's bad, but the market generally, the big things are GDP and unemployment and some of the PMIs and whatnot. Not all are equal, but there's one thing. This is talking about sentiment. RCM tip economic index. And this is just basically, let me go real quick. Index has remained in negative territory for 36 months, and it's optimism among investors. So that's really optimism, and that could explain why they're starting to sell off. Maybe optimism in investors is going low, but that's all. I don't think there's too much. I'm just looking at the data today. What's Wednesday? Nothing really big. This is gonna be a light week. But some other things I want to talk about. So let's get into well, let's go back. So that's what I think is happening with the markets. And as I said, there was some short covering and whatnot. I'm not sure if I see a crash now, but I we're near the top of this cycle, and it's gonna once this is done, I still think it'll be a 10 to 20 year bear market, and US will also then break apart. I also think that I don't know how that's gonna affect the markets. Maybe the Dow will no longer exist. Maybe there'll be all sorts of different markets. So it's possible this market never comes back per se. And But I mean, the Ellioticians that I follow a lot. 6,000. They say S&P is going to 6,000, so there could be more room to run. But in terms of the economic data, I expect it to get worse and worse. Just mirage of any type of strong economy. They're now seeing cooler labor demand. It's going to be gone. And here's a couple of good examples. This is what I was trying to find yesterday. Starbucks losing customers. Of course, $6, $7 coffee, Americans can no longer afford it. So look at this. Starbucks is finding growth harder to come by. So there it is. And of course, they're putting their spin on it, thinking that it's like everyone's trying to come when you're the top brand, everyone's coming for you. So people are nibbling their share. That's what I got. Everyone else comes to try to nibble away your market share. But the reality is a lot of people love Starbucks, have the huge brand. I know uh what's that generation Z, Gen Z, that's what it's called. I know a lot of people will just go to Starbucks just to go to Starbucks. Every time they go to travel, you get that Starbucks mug. I have some of these mugs from European cities. They love the so I don't buy that it's the market share. I think it's consumers can no longer afford to buy Starbucks. Starbucks is a brand that charges a premium. And just to show I'm correct, here's another thing that came on. Consumers are cutting back on spending, more selective on where they spend. Yeah, they're more selective because they don't have much money. For example, if I can only go to the grocery store once a week, I'm going to be very selective. If I can go anytime, I'll be like, all right, I need to go to the grocery store anyway. I'm right here. I'm gonna go. I'm just gonna get groceries for the week for the next couple of days. But if I'm very budgeted, I'll be like, nah, I don't want to go here. I can only go to the store once a week. I'm stuck with this food. I can't go back because I'm making less money. My interest rates are going up. Cost of living's going up. I have all these payments. So you know what? We have a little bit of food. We can get by. I'm gonna go to the Walmart because I'm gonna go to the Giant because they have fresher meat. Or I'm gonna go to Lidl because it's cheaper. Or I'm gonna go to Trader Joe's because it's relatively a good price and it has relatively good food. So I'm not gonna screw this up or blow budget. So yeah, but in a good economy, someone might say, "Oh, here's the grocery store. I'll buy a couple of things for tonight." That doesn't happen. So here it is. Lower and middle tier consumers are becoming more selective about where they spend their money. Yeah, they're more selective because they don't have as much money. So, and I love it. This is the phrase word, value oriented, in quotes. Look at me, in quotes. Value oriented. No, they're not value investors or value oriented. They're broke. That's what it was. That's what it is. So anyway, they'll say value oriented consumer stocks. Yeah, they're putting their spin to not put, in my opinion, to cause a market crash. And they said Walmart have outperformed. Walmart, I listened to their conference calls. Walmart is bragging about how the upper class are now trading down and going there. Customers that normally wouldn't come. And then of course all these underperform. But here's some comments in the earnings calls to show it's not a quote unquote one-off thing. McDonald's lower income consumers are dropping out of the market, eating at home and finding other ways to economize. That's uh McDonald's. Here's Mohawk. Residential purchases across geographies remain weak. Actions taken to improve volumes help, though gains were offset by consumers trading down. So yeah, here it is. Consumers are trading down, and as I said with Walmart, Pool Corp, whatever this is. Customers who primarily focus on new pool construction, renovation, and remodel continue to report lower demand for low to mid range pools, while demand remains solid at the higher end. Yeah, well, asset prices haven't crashed yet. Wait till asset prices crash. Lamb Weston. We expect restaurant traffic to remain soft for at least first half of the year as consumers continue to adjust to cumulative impact of years of menu price inflation. So here it is. Let's keep going. Bank of America. This quarter, consumers' net charge-offs were 59 basis points prior to this quarter. I have to go all the way back to 2014 to see a charge-off rate that high. Citigroup, we also continue to see a divergence in performance and behavior across FICO and income brands. So yeah, Conagra, I don't know, I'm not sure exactly. The headline in the last year is that value-seeking behavior was not exempt from any income level. Even higher income consumers didn't like the new price points they were seeing in the basket, and they would trim their normal purchases. So yeah, there you go. Conagra is same way. You know, the rich are hurting too. They're just saying the rich aren't hurting because they're, through messaging, they're and through propaganda, they're trying to keep this stock market up. The reality, just like the soft landing of last year, you can only deny reality for so long. Delta Airlines. While demand for air travel remains strong, domestic industry seat growth has accelerated through the summer months, impacting yield performance in the main cabin, whatever that means. Yeah, nice word salad to say. So yeah, anyway, you can see consumers across in the show also. This is mainly the under 40 group, but Airbnb shares dropped 14% on earnings miss as company warns of slowing US demand. Yeah, it's a recession. And a lot of these are working class people, younger people that would travel before, but they're not because either the Airbnb costs have gone up, new fees, they can't afford it anymore, so they're staying at home. Or the other one, maybe flights have gone up. Or maybe lost their job and they can't, maybe it's an income thing, but it's either cost and income, and that's what it is. So people cannot they can no longer afford a vacation, so they're doing it less. So, and here's the other two things. I'm going to go into these and show you the worst is not yet over. This is only the beginning. This is Axiosis, stretched consumer. Delinquency rates for credit cards and auto loans tick off. Now, I've been talking about this on my channel if you've been following it for a while. But these are two bad loans in the economy that are going to do structural damage along with commercial real estate, the credit card debt and the auto loans. It's only a matter of time, especially when you have interest rates of 25 and 30%. So consumers continue to look more financially stressed, according to new data from the New York Fed. More Americans are falling behind loan payments. Household balance sheets once looked rock solid. That's no longer the case as the economy slows and high interest weighs on the consumer. Notice how it's not just high interest. It is the economy, it's jobs, it is income. Roughly 8% of auto loans were newly delinquent in the second quarter, with payments at least 30 days late. Story looks similar to credit card balances. Deterioration among household balance sheets is clear when compared to those of last year. So there it is. And this is only going to get worse, especially among the credit cards. We're going to show you this too. Right here, another article published today, August 6th, written by whoever these people are. Americans' credit card balances rose 2.4% in the second quarter to a record high of $1.14 trillion, 48% increase since the first quarter of 2021. More people are carrying debt for longer periods of time. So anyway, just to show you, you see bankruptcies are rising and rising and rising. Meanwhile, debt continues to pile up. So that means we have more bankruptcies to come, much more to come. And yeah, that more bankruptcies to come. And that's one reason the consumer's slow. Is they can't borrow anymore. So now they have to be more selective. They used to be able to just put it on a credit card. But now, since they can't put it on a credit card, and that's what I'm saying, we need prices to come down. So these are things I talk about the housing crash that's coming. But I do think that the credit card this bubble pops, the auto loan bubble's popping, and the commercial real estate's coming first. And then you're going to see prices across the board, regardless of area. You're going to see it in the housing market too. And it's going to play out over a couple of years. I don't think it's going to come tomorrow, in my opinion. Probably over 6 years. And that's probably we'll see what happens. No, there's also the treasury bond market. That's a bubble, but that's long. That's into the future, meaning 2030s, maybe late. Who knows? Maybe. But we're seeing a lot of problems. And yeah. And I went over a video yesterday about cutting rates. I think that's happening. I think the Fed's gonna cut the rates again. Uh Actually, one thing I did want to show you. Let me see if I can well, anyway, I'm gonna wrap things up today. I'll show it another time. But anyway, if you watched all the way through, thank you very much. Remember, hit that like button if you watched all the way through and subscribe if you already haven't. And I will see you next video.